Inflation is the gradual rise in prices for goods and services, which means your money buys less over time. It's like an invisible tax, quietly eroding your savings and reducing your purchasing power. You see it when groceries, gas, or movie tickets cost more than they did last year. Inflation forces families to adjust budgets and rethink financial plans. Governments track inflation using the Consumer Price Index, or CPI, which measures changes in the cost of a typical basket of goods. Central banks, like the Federal Reserve, use this data to decide whether to raise interest rates to keep inflation in check. Inflation isn't just an economic theory. It's a force that shapes our daily lives and financial decisions. From ancient Rome to today, inflation has always been part of the economic landscape. Understanding how it works helps you make smarter choices about saving, spending, and investing. In a world where prices are always changing, knowing inflation's impact is key to protecting your financial future. Inflation is driven by several key factors. Demand pull inflation happens when people have more money to spend, but there aren't enough goods to go around, so prices rise. Cost push inflation occurs when the cost of making goods goes up, like when oil prices spike or supply chains break down. Central banks also influence inflation by controlling the money supply. Printing too much money or keeping interest rates too low can fuel rising prices. Expectations matter too. If people think prices will rise, they may buy more now, pushing prices up even faster. This can trigger a wage price spiral, where workers demand higher pay, businesses raise prices, and the cycle continues. Managing inflation is a balancing act for policymakers who must keep the economy growing without letting prices spiral out of control. The psychological side of inflation makes it especially tricky. What people believe about the future can become reality. That's why central bank announcements are closely watched by markets worldwide. Inflation isn't random. It's the result of real-world pressures and decisions. Understanding its causes helps you anticipate how it might affect your wallet. Inflation directly impacts your purchasing power. Your money buys less as prices rise. This hits hardest for people on fixed incomes, like retirees, whose payments don't keep up with the cost of living. If your savings earn less interest than the inflation rate, you're actually losing money in real terms. Simply holding cash is a losing game during inflationary times. Borrowers can benefit since they repay loans with money that's worth less, but lenders lose out. High inflation leads banks to raise interest rates on new loans to protect themselves. People may spend or invest more quickly, hoping to beat rising prices, which can fuel even more inflation. Managing your finances becomes more complex, requiring smarter strategies to protect your wealth. Inflation turns everyday money decisions into a strategic challenge. Inflation and the stock market have a complicated relationship. In the short term, rising inflation can hurt stocks by creating uncertainty and prompting higher interest rates. Higher rates make borrowing costlier for companies and make bonds more attractive than stocks. But over the long run, stocks can be a good hedge against inflation because companies can raise prices and grow revenues. Not all stocks perform equally. Companies selling essentials or with strong brands tend to weather inflation better. Sectors like consumer staples and dominant tech firms often have pricing power. Highly competitive industries with thin margins may struggle. For investors, inflation is a reason to review, not abandon, their portfolios. Diversifying across sectors, real estate, and commodities can help manage risk. The goal: own assets that outpace inflation's bite. Staying invested in quality companies is a proven way to grow wealth, even as prices rise. Inflation shapes economies and personal finances alike. It erodes cash, challenges savers, and forces smarter investment choices. Policymakers must balance fighting inflation with keeping the economy healthy, a tough task with real consequences. History shows that unchecked inflation can destabilize societies. Today's world brings new inflation risks, from global supply shocks to shifting demographics. Financial literacy is essential. Understanding inflation helps you protect your future. The era of low inflation may be over, making smart money management more important than ever. By learning how inflation works, you can make informed decisions and navigate whatever the economy brings next.